Hello to you all, wherever you are in the world. We're happy not to see you back, but to be back with you for these new tax talks. We have quite an exciting hour in front of us with some news on the international tax front. You can join the discussion. You have here the generic email address. We have people backing up and looking at your questions. They will bring them to us so that we can spend the last 10 to 15 minutes responding to your questions, and you can feel free to tweet. I won't be able to do it while speaking, but I count on you to be active on Twitter. Topics of the day. We have first, some words of introduction on the G20 and the recent Forum on Tax Administration, which took place in Oslo. Then we'll move to the digital economy. We already have received a number of questions on the digital economy. I should say, and we should have adjusted that, it's the digitalization of the economy more than the digital economy. We have a public consultation in a couple of weeks, or fewer than that, in 10 days' time in San Francisco. So we'll take stock of where we are on that front. Then we'll brief you on the report which was released yesterday on harmful tax practices and the peer review of harmful tax practices, with some interesting findings and, more importantly, showing that things are happening. We'll move then to tax treaties with a quick update on the Model Tax Convention, which has been released publicly, and the BEPS Multilateral instrument. Where do we stand in terms of signing countries and what's next? We'll move to what I call the third tax pillar of the G20 after transparency and exchange of information. One, after BEPS. Two, we have tax certainty. And we have some interesting news drawing on the work of the Forum on Tax Administration, which took place in Oslo and launched a very important initiative, ICAP, that we'll get into the details of. Finally, we'll end up with recent developments, the next key meetings ahead of us. To do that, I'm glad to have part of the team with me. You will hear on the digital economy from Giorgia Maffini, who you already saw on the webcast earlier. On harmful tax practices, on tax certainty, you will hear from Achim Pross. On the Action 14, which is related to the tax certainty project, Caroline Malcolm will make a point on where we stand on the peer reviews on Action 14. And finally, I'm very happy to welcome to the team and to the webcast our new head of tax treaty. So be welcome, and you will hear directly from our new head in a few minutes. Let me move to the introduction. Update on the G20. I was in Washington on Friday to attend the G20 finance ministers meeting, which spent one session on international tax. Finance ministers from G20 countries, a number of them spoke. They all expressed strong support for the tax work. And it's striking to see that almost 9 years after the elevation of the G20 at the leaders level, with G20 finance ministers meeting regularly, tax remains not only what they call a success story, but a very sensitive story that they are all very much involved in. And during that session, where was mentioned the progress made as regards automatic exchange of financial information. As you know, automatic exchange of information has started. It started actually a few weeks ago, on the 30th of September. The first exchanges under the Common Reporting Standard through the Common Transmission System took place, and we can report that things went well. Information has been exchanged and now is in the hands of tax administrations to be exploited. We'll see what they do with that. We discussed this in the context of the Forum on Harmful Tax, on the Forum on Tax Administration, I'll go back to in a few minutes. But things are happening, promised, delivered here. Finally, and most importantly, ministers talked about the digitalization of the economy and its tax consequences. Things are moving here. As you know, we have a mandate to deliver a report by April 2018. And we had a good discussion with finance ministers expressing strong support for that work and indicating where they think this work should go towards in the coming months. So we'll report into more details when we reach the digital economy. Let me say a few words of the Forum on Tax Administration. That was the 11th plenary meeting at the level of tax commissioners. It's pretty impressive. You have more than 50 countries present, out of which we had more, I think, than 30 tax commissioners present in Oslo. The meeting was chaired by Edward Troop. That was his last meeting as he's stepping down as chair. And we elected a new chair from Norway, Hans Christian Nolte, who will now preside over the FTA. Interestingly, the FTA dealt with a number of key issues and is structuring itself to be able to address the challenges of the implementation of international tax. First, and primarily, focus was on the implementation of automatic exchange of information, on how to best use the information which will be received through automatic channels, on financial information, country-by-country reporting information, tax ruling information. How do you train your administration to make sure that you take the best out of that? On BEPS, how to use these new instruments. But also, and very importantly, on tax certainty. You may remember that at the previous meeting of the FTA in Beijing 18 months ago, there was a great deal of interest from tax commissioners on promoting tax certainty, which may come as a surprise, but that was a very happy surprise that tax administrations would invest significantly in this area. This was confirmed in Oslo with a number of sessions on this and the launch of one initiative. Improving compliance through work on the shadow economy, focus on the effective use of the CRS data was also high on the agenda. And finally, building tax administration of the future, digitalization of the economy is also including the digitalization of the tax administrations, and there were good exchanges among tax commissioners there. There were a number of outputs. The tax administration series, the TAS 2017, for those of you who want to benchmark tax administrations or to be able to understand how a tax administration is organized in one country, whether it's a separate agency or not, how many tax inspectors are employed, what's the organization, what are the main challenges, you can refer to that quite interesting survey. We had a number of reports, the changing tax compliance environment and role of audit, shining light on the shadow economy, opportunities and threats, and on CBCR, I think extremely practical and important handbooks, the handbook on effective implementation, the handbook on effective tax risk assessment. These are key to tax administrations, but also to business, I think, while you are probably completing your tax return, including country-by-country reporting nowadays, or have just done so, that will be interesting to have these handbooks in mind, because they will give you an indication of how tax administrations will do the risk assessment and will use the CBCR information. Let's move to the digital economy. I will turn to Georgia in 1 second, but before that, let me just set the scene. As you know, we had at the previous G20 meetings in Baden-Baden, I think it was February or March 2017, and this was confirmed in Hamburg by the G20 leaders in July 2017, this year. We had a mandate to deliver a report, and it was agreed that this would be an interim report on the implications for taxation of the digitalization of the economy. And the deadline for this report was set at the spring meetings of the IMF and the World Bank in 2018, which I think will be probably on the 18th of April 2018. So we have to deliver that report. This report is being drafted currently by the team and in consultation with business, with civil society, with academia. We have very large consultation drawing on Action 1 report of the BEPS Action Plan. As regards the public consultation, it will be in 2 steps. We requested for written comments. I think the deadline was yesterday or so. We received more than 50 contributions, and it will be followed by a physical meeting in the Bay Area, in Berkeley, and we will have there many representatives of governments, including, of course, the US government. I understand that the new Deputy Assistant Secretary in the US may attend. We will have the EU presidency, Estonia. We will have a number of members of the Bureau of the Task Force on the Digital Economy, which will allow the business people or civil society people attending the public consultation to interact with representatives from country. And in that context, we'll probably come back because we may have questions, but we are glad to report that it looks like the report in 2018 will have to deal with the good analytics of what's going on, the business models, the value creation, why one would like to tax the digital economy, how can we design a system which will not harm the development of the digital economy, some fundamental questions that we need to deal with so that we could then identify what the long-term solutions could be to make sure that we level the playing field and that we have a good tax system conducive to raising revenue, but also conducive to developing business. And there may be some form of discussion on what short-term solutions could entail, probably many downsides, but if some countries have to move into that direction, what could be done to limit the damages that they would do if they are to move there, which could be part of the conversation, as you may have heard over the summer, that some countries took initiatives to move into that direction. Let me stop here, turn to Georgia so that she can drive you through the public consultation.
Thank you very much, Pascal. So as Pascal told you, our public consultation process has been structured along 2 main steps. The first one is a request for comments that closed on Friday, and we have received well over 50 submissions from business, civil society organization, academia, legal and accounting firms. So thank you very much to all of you who have participated really so actively in our consultation process. The second step of our public consultation will be a meeting with the stakeholders at the University of California in Berkeley on the 1st of November. And there, as Pascal said, we will have government representatives and then representatives from business and civil society and academia, and the speakers and participants will be chosen among those who have submitted written comments. But so what are we exactly consulting upon? So we have a set of questions on how digitalization has changed business models and the process of value creation. We have questions around the challenges and opportunities for the current tax systems, and questions on how the implementation of the BEPS package has affected business behavior. And finally, we have also invited comments on the tax options, so the possible tax options to address the tax challenges of a digitalized economy. What are those tax options? We started with the 3 options that were present, already outlined in the Action 1 report. The first one is a new concept of nexus, the significant economic presence, then withholding taxes, and an equalization levy. But we all recognize that the environment has changed substantially with respect to when the Action 1 report was published. So this is the reason why we are also consulting on other measures that have been either announced or introduced by countries around the world. And this includes turnover taxes that have been really at the center of the debate in the last 4 to 5 weeks. To conclude, so the next steps will be for us to publish the submissions for the request for written inputs very shortly, possibly next week. Then to remind you that the meeting with the stakeholders will be on the 1st of November and it will be webcasted. So you will be able to follow us online. And for us, the final hard deadline is April 2018, when we will present our report to the G20 finance ministers at the IMF and World Bank spring meeting in Washington, to be held on the 19th and 20th of April. So I think that's all from me. I really hope you will want to follow very closely our work on digital. And I think I can hand over to Hakim, who will be speaking about the BEPS Action 5.
Indeed. I'll talk about harmful tax practices first, as Georgia has indicated. And then I think here, as you know, and we've done updates in the past, as a recap and a status, there's 2 parts to this work. The first part relates to the preferential tax regime work, and I'll talk about that in the main because that is where we have just released the report that I presume you have all read overnight. We released it yesterday. And then there's a second part, which is the mandatory spontaneous exchange, automatic exchange, you could say, of information on certain tax rulings. And those are the 2 disciplines on harmful tax practices. I'll speak of the first one, just a brief word about the second. That is a peer review process that is now ongoing. It involves governments because the rulings are issued by governments. We are reviewing also whether governments are implementing it correctly and hope to also have a report on how this is doing later in the year. But now focusing on where we got to on the peer review of preferential regimes. As it says here, we reviewed 164 preferential tax regimes since the publication of the 2015 report. So a big piece of work has been done. We've also published this now on Monday, and this is, of course, important for the OECD process. It's a minimum standard of the BEPS package, but it's also relevant for the EU process. It allows the EU process to take into account and take stock of what has now been published in as far as it's relevant for the work also at the European level. If you, and this is, I think, the results in a snapshot, I'm going to spend a little time just taking you through what this actually means and decoding some of our wonderful colors. What does that show you? So these are the results as they stood on the 4th of October 2017. So as I said, 164 regimes. Where are we? We have 2 regimes that have been identified as actually harmful. There is one regime in here, which is the French regime, which is the only unreformed IP regime that has not conformed to the Nexus standard. Of all the countries across the membership of BEPS, so of more than 100, there's only one left that has not been changed, as a result of which it's been designated as actually harmful. The second one that you find in there also under harmful is a transition aspect of the Italian IP regime. So that is allowing for a certain limited period people into the regime when the cutoff date has already happened. And so that's more of a transition aspect, if you wish, rather than something in principle. The Italian regime, unlike the French regime, for going forward is fully consistent with the internationally agreed approach, which, by the way, is the same approach that is being used also in the parallel exercise that is happening at the level of the European Union. The second group are potentially harmful regimes. So those are regimes that we're still looking at, but we haven't actually determined whether they're actually harmful. That's another step. So what this means here is they go against some of the standards in the area of harmful tax practices, but we have not completed the economic assessment, which is the second step, as to whether there's actual economic consequences on other countries, which we have done with the first 2 that I have just mentioned. And then maybe further down below, you see also that there is a number of regimes that we have looked at and that we have determined to be potentially harmful, i.e. they violate some of the principles, but we have determined not to be actually harmful because they're very small and so they don't actually have the economic consequences. So those are now subject to a monitoring regime going forward to make sure that should they grow, we'll have another look, and they could become actually harmful. So where does this leave us now overall? I think it is a good story. It's a good story because if you think about it, for 99 regimes we required action, and for 93 the action has already been taken or initiated. And it also means when you see all these IP regimes, they have been amended. That is the reason why they've been cleared. So we have 93 where things have already happened, and it's only 6 where we still need to get to that result, and we haven't quite. 56 don't pose a BEPS risk, and 9 regimes are still under review. There's particular circumstances such as the hurricane season in the Caribbean that I think everybody reasonably agreed needed more time, and we can also, you see in the report which ones they are. In IP regimes, I think we can fairly say it's a success story. Nexus has gone global, and apart from, as I said, the French regime, we now have globally an implementation correctly of the Nexus approach all around the world. So then let me go to the next bit, which is then also, I think, the last bit, and this, I stay within the time, I think. Where does this take us? I think we have substantial activities principle agreed and implemented around the world, which is a big step if you think that Nexus didn't even exist a couple of years ago, and now not only has it been agreed, it in fact has been implemented all around the world, and that's the countries of the OECD, of the G20, and also all the new countries that have just come in to the inclusive framework. We will have to do further work on monitoring to also make sure that those that have committed to change will actually change within the timelines that we have agreed of 12 to 15 months, so by the end of next year. We'll have to do capacity building, and we have to work with a lot of the countries that are new to this process to make sure that they have the capacity, the ability to implement all of these. So a big log going forward, but I think also a big achievement that has been done, and you can see that in the published report. Further updates to come in 2018-19 also on the work on preferential regimes. And with this, I think I give it to Sophie.
Thank you. Thank you, everyone. So let me briefly update you on tax treaties and the MLI in few minutes. But first of all, on the 2017 update of the OECD Model Convention, I'm very happy to say that you should expect to receive an electronic copy on our website before the end of this year's, and the paperback copy should be available in 2018. The update, you have seen it on our website because we have provided you a copy, a version for comments, and thank you very much for your comments. They include most of the tax treaty-related BEPS measures. They also include other measures on international traffic and substantial changes on permanent establishment, the definition, and the tiebreaker rule, which is not necessarily related with the BEPS outcome. So moving to the multilateral instrument, we had this big signing ceremony in June, but since then some countries have joined the multilateral instrument, so we now at 71 jurisdiction covered. Well, this resulted in match agreement of over 1,100 tax treaties. So this is a very successful outcome, considering that this number covers 1/3 of the worldwide tax treaty network. But it's not the end, because we already have new countries that have said that have conveyed their intent to join the multilateral, and as more countries are signing the multilateral, there will be further matches, so we expect that number to increase in the coming months. So now let's take a look at what countries have actually signed up in the multilateral. And one of the big success of the multilateral instrument was that it provided a way for countries to implement the tax treaty BEPS minimum standards and other treaty-related measures. So it's no surprise to see that on Action 6 of the BEPS project, we now have it translated in the wide adoption of a new preamble and a principal purpose test that aims at addressing tax treaty abuse. So that commitment by countries will now translate into the update of over 1,100 tax treaties that will now include those two provisions. So a very, very good success there. On permanent establishment, that was not part of the minimum standard, but still 300 treaties or over 300 treaties will be updated and have those new permanent establishment measures. Article 16 of the multilateral instrument was also part of a minimum standard for countries to update their mutual agreement procedure. So again, over 1,100 tax treaty will be updated. On arbitration, that was optional for countries to adopted mandatory arbitration, and some countries have adopted. And in my view, it's a very positive outcome of the multilateral because it will introduce mandatory arbitration in over 160 tax treaties that wouldn't have had that provision in, or at least certainly not in that time frame. So we're happy with that as well. And we expect that countries, as they get more experience or heard about the good experience in other countries, will also be interested in joining this option. Now, when will the multilateral enter into force? Well, it takes at least 5 countries to ratify the multilateral instrument so that the multilateral instrument come into force. So we are happy to say that we received the first ratification by Austria, who deserved the gold medal for that. And we don't know yet, but the race is close for the silver and the bronze medal. But all that to say that before the end of this year, we hope to have 5 ratification, which will bring, in accordance to the term of the MLI, will bring the multilateral into force 3 months after the 5th ratification. So all that to say that we expect that the multilateral will enter into force early in 2018. And with that, I will turn again to Akim, I think.
I think that's right. I think I will now click to 7, 8, 9. I do the gold medal. And with the gold medal, I move into tax certainty, the gold standard of taxation. So that's the next piece on which we wanted to provide some update. Tax certainty, dispute prevention, and dispute resolution, of which, of course, MAP is a big part, and Caroline will cover the MAP part. But before we go to the MAP part, I wanted to give you 5 minutes on an overview. Some of you may have already seen that on the work that we're doing, I guess, comprehensively in order to minimize disputes, prevent disputes, and then resolve those disputes where we weren't able to prevent them in the second stage. And of course, you see here on this chart that we put together that there is MAP, and there's also arbitration, and Sophie's just updated you where we are on the inclusion of arbitration through the MLI, so that's also part of BEPS. And then, of course, there's MAP, and Caroline will speak to that on dispute resolution. But I guess ideally, we would all agree that ideally, there shouldn't really be anything in the MAP pipeline because we would have been successful in making sure that we never disagree, so we don't need to resolve it through the mutual agreement procedure, or failing that, through arbitration. And so just to give you a sense of what we're trying to do here, and this is where it says FTA work, it's all the work that we're trying to do in dispute prevention. It ranges from pre-filing arrangements, looking at the cooperative compliance arrangements, both domestically, but now also taking them to a multilateral level and exploring the ICAP, about which I will speak in a moment. There's, of course, APA, but there's also coordinated audit strategies, in particular joint audits. And in the FTA, we want to take another look at what can be done in the joint audit space. Before you even get there, and this is what it says above, there's a risk assessment process, and we will also be doing work in the FTA to look as to whether we can generate more convergence in the risk assessment processes that we use that also determine then what is actually going to be audited, what do we look at, and importantly, what do we not look at. It can't be that as a result of CBC everything gets audited. It needs to be a selective process, which is risk assessment, primarily meaning where do we put resources and where do we not. And the last point I wanted to highlight is the one that says global awareness training for international tax examiners, which is the space where we want to look again as what is it that we can do so that adjustments that then the competent authority feels it cannot really defend in a MAP process and will drop, that those adjustments ideally don't get made in the first place. So there's a lot of work on these different areas for specific things where we will be doing work moving forward in the FTA. I want to highlight, as Pascal has said, just a brief word about ICAP and what we have in mind here. Here are some of the drivers. There are some more slides I will walk you through, but in some sense here you kind of see what this roughly is. It relates to Action 13. It tries to have an intelligent use of the information that comes out of the CBC reporting. It has aspects of Action 14 because it seeks to reduce the pipeline, the cases that need to be resolved in MAP through early intervention on a multilateral space. It is built on international collaboration forums that we've now had at the OECD in the Forum on Tax Administration. It builds on the work that we've done, the tax control framework, many other things. And of course, it provides also benefits, importantly, to MNEs. So you see this here. It's a program for not high-risk MNEs. It's a voluntary program. It's something you need to opt in. Otherwise, don't worry about it. It focuses on transfer pricing and permanent established and other agreed specific international tax issues. And in the end of the day, it provides certainty. The benefits that we see of this program to both MNE groups and tax authorities, we've summarized here in a nutshell. It's a fully informed use of CBC information, and this is where it came from. It really originally came from the idea that companies came to us and said, look, we'd love to have a multilateral conversation about what's in our CBC report, because when we first looked at it, we were maybe surprised ourselves of what it actually shows. So can we have a conversation about this? And rather than having the conversation 7, 8, 9, 20 times individually, can we do it together? So we explain it once and explain it to you. And if you have questions, we'll answer those. It's an efficient use of resources here because you engage simultaneously with multiple tax administration. And then there's a coordinated follow-up via a lead administration in this process. There is faster, as it says here, clearer route to tax certainty. It's a managed process. It has fewer or more targeted interventions. And it also allows effectively for tax administrations to gain assurances that risk areas identified. It's very important for tax administration to have this multilateral space where they see that there is 7 tax administrations that have all looked at the risk, which of course gives additional comfort to tax administration as well and allows us to provide the assurance space. And lastly, of course, it reduces what needs to go into MAP because we go in earlier, we go in when people still know why they were doing what they're doing, when the people are still in place and when positions haven't been entrenched. So much better to resolve it early rather than later. This is just an overview on how this works. You opt in there. There's a documentation package. There's a 2-part risk assessment stage. There's a follow-up meeting. And if you successfully, as a taxpayer, run through this program, there is ultimately an assurance letter to be issued. So you get tax assurance quickly from a number of tax administration on both your transfer pricing, PE risk exposure, and potentially other risks if they're included. And not to stretch the time too much, then I guess the last slide, I think here on ICAP, just to give you a sense, there are now the tax administrations that you see here in this pilot program. It's Australia, Canada, Italy, the Netherlands, Spain, the UK, and the United States. MNE groups have been identified and have been invited to participate. There are some other countries that have a lot of interest in this process, and tax administrations, they will observe, but of course they won't see any of the information that will be exchanged using the legal instruments in place. So this will all take place on the basis of legal instruments for information exchange. And then we'll look at this when we come out, hopefully successfully after about a 12-month period, and think about what changes need to be made, and hopefully, if it's success, viewed a wider rollout. And of course, it will also inform our wider work on risk assessment because that's specific taxpayer-specific transactions. So that's all I wanted to say, I guess, on where we are on the ICAP program. And I think with that, I give it over to Caroline to update you on Action 4T.
Great, thank you, Achim. And you can see that we are working hard to make sure that we do not have any disputes that need to be resolved. But in the interim, we have the BEPS Action 14 peer review process. And you can see on the slide there an outline of the timetable that we're looking at for the first 4 batches of peer reviews. We have, of course, just released last month the first batch of 6 reviews. Now, you'll recall in terms of the actual process, they are based on a terms of reference and methodology that was published in October last year. And the review really looks at the minimum standard broken down into 4 areas. Firstly, the prevention of disputes, the availability and access to the mutual agreement procedure, resolution of MAP cases, and then, of course, the implementation of those agreements once they have actually been reached. So you can see in the 6 reports that have been published, they cover those 4 areas. They're based on peer input, and we've received very good input from other tax administrations through this process. I'll also highlight that we also call for taxpayer input through this process. That's obviously very important. We will have coming up in November the 4th call for taxpayer input for the 4th batch of reviews which are taking place. There is a questionnaire that you can fill in if you have any experience with MAP in those 8 countries that will be reviewed, and really do encourage you to take part in that input process. So turning now to have a look at some of the first outcomes that we're seeing through the peer review process. Now, this is obviously based on the first 6 reviews, and we'll continue to monitor what sort of trends we see coming out of the review process. Perhaps 2 points to highlight on the positive side. In particular, firstly, we're seeing that access to MAP is being granted in eligible cases, and also that competent authorities generally have adequate resourcing to deal with MAP cases. Secondly, that MAP agreements are being implemented in a really timely manner once they are reached. So that's quite an important development. Now, on the not so positive side, we have seen across the 6 countries that have been reviewed that about 25% of the tax treaties that those 6 countries have in place are not up to the minimum standard in all aspects. As Sophie's told us, though, we are seeing a number of countries moving through the multilateral instruments to actually update their tax treaty network. So we will see progress made through the MLI, and also for those countries, some of them have indicated that they will be taking a bilateral route to make sure that their tax treaties do in fact meet the standard. Perhaps the second point there to mention in terms of the not so positive things we're seeing is that obviously in very complex technical issues, often to do with attribution and allocation of profits, particularly in transfer pricing cases, we are seeing that resolving those cases within the 24-month timeline is proving to be quite a challenge. And we will continue to look at how that progresses, because as you recall, there are 2 phases to this peer review process, and the second phase will take place about 12 months after the first. And what it will do is look at how those countries have moved to implement the recommendations that have been made. Now, there was about 110 recommendations for those first 6 reports, so countries definitely have some homework to do. And just turning now to let you know about something which is upcoming in November. It's quite exciting in terms of tax certainty, is that we'll be releasing the 2016 MAP statistics. Now that we're going to see in that report a massive increase in the number of jurisdictions we cover from 40 to about 85. But most importantly is the quality of data. And because it's based on a new framework, in particular common definitions in how we actually look at the indicators for progress on MAP, we're going to see much more consistent data coming out in November, and that will be really important going forward in terms of making sure that there is accountability by tax administrations in terms of meeting the commitments that have been made, and obviously in turn very important for tax certainty for taxpayers. And I think on that note, Achim, back to you on country by country.
Thank you, Caroline. I'll take you now to an update on country-by-country reporting, where we are, starting with, quite logically, kind of a status of implementation. Now, you probably know that, but sort of roughly, like, where are we here? CBC reporting is intended to apply for years commencing 1/1/2016. That's known. The latest deadline then for filing following the 12 months after this is the 31st of December 2017. Now, for a long time, this was a date that was relatively far away. Now, increasingly, of course, we're getting very, very close to this date, and this is also a date that's sometimes being used for local filing. So it is crunch time in the Secretariat, also making sure that we land all in the right place and we don't have any inadvertent instances of local filing. The deadline for the exchanges then is June of next year. So that's the first time where the CBC reports using the exchange infrastructure that we have put in place will take place for the first time. About 55 jurisdictions have now implemented an obligation on ultimate parent entities to file CBC reports, and the number is increasing. So we work with a number of countries. So it's spreading very widely, and of course that covers the vast majority of MNEs that are covered by the 750 million threshold. In terms of exchanges, where are we? We have last week, as you may have seen, activated the first set here of exchange relationships. So there's now over 1,000 exchange relationships, bilateral exchange relationships, that have been created through the framework of the Multilateral Competent Authority Agreement on the exchange of country-by-country reports. There's 65 signatories to this. And as also in the case with the CRS, there is no requirement to go through the Multilateral Competent Authority Agreement. You can equally use a bilateral approach, use bilateral competent authority agreement. And so, for instance, the United States is pursuing that approach, and as of our last count last week, has now signed 27 bilateral qualifying competent authority agreements, with more under negotiations, and we will be providing updates frequently in the run-up to the end of the year on where we are on the activations of the relationship, both on the bilateral side but also on the multilateral side. In addition to CBC reporting, there's also 40 jurisdictions, and as for information, that implement the requirement of master file and local file, which is not itself part of the minimum standard on Action 13, but we added it for information. So that's the status of implementation. Then moving to the next thing that we do, we issue guidance, we issue handbooks. Pascal has already mentioned it. So this is something that you probably know. We've issued this. We have now issued guidance on 16 key questions that's been publicly released. And of course, this has been agreed with the countries, should flow through to country implementation. We have also issued detailed guidance on the appropriate use. How are tax administrations meant to use the information, not just effectively, but also, importantly, appropriately? How do we ensure that it is being used for nothing but high-level risk assessment of transfer pricing and other BEPS-related risks? And that is the basis, the foundation, and the reason for having done the guidance on appropriate use. And then finally, we issued, as Pascal mentioned, 2 handbooks that go through the effective use. What are they going to do? How are they going to use the information? What's an intelligent use, including all the don'ts? So don't assume if you see X, it must be a red flag indicator, but also some of the do's and some practical work that, of course, we will continue also and update and work with the tax administration in the forum on tax administration as this information actually comes in June, to then also see whether what we said was going to happen is what they're seeing, and what, if any, changes we want to make, and how do we learn more comprehensively on an intelligent use of CBC reports. And that's the link back also to ICAP, because ICAP, of course, is one way of using CBC effectively and hopefully intelligently. The next part then is, where are we on the peer review itself? As I've said, it's a minimum standard, the CBC part of this. And this here on the slide gives you an idea of roughly where we are on the review of the correct implementation of the Action 13 standard. It's a phased approach because Action 13 is being phased in. So we look into 17 and 18 of a particular piece, or took 218 to 19 on the second piece, and it's in 219 to 20 that we look at the complete picture. We are on track, as it says here, for the completion of the first phase of the peer review, which is then also scheduled to be released in March of 2018. So that's roughly where we are in the peer review. And then to finish off on the next steps, which we could also call, what is it we're currently working on? A lot of things to make sure that we get this all right now that also we're coming close to the timelines here. So one, we're ensuring that the exchange relationships are all in place to allow the automatic exchange of 2016 CBC report based on the agreed timeline. We do a lot of work with jurisdictions to address transitional issues, where, for instance, currently qualifying competent authority agreements are not yet in place, where the convention maybe hasn't come into effect, but they may already have local filing. What can we do? Are there instances where local filing can be waived? Are there other things that we can do, tailor-made solutions? So there's a lot of work happening in this space, seeking to avoid that we have, as it says here, inadvertent local filing for a blip, for a transitional period, which is a result that we want to avoid as much as we can. We also then, second here, support developing and emerging jurisdictions and implementing and operating CBC reporting, which of course fits into the wider work that we do also on transfer pricing. How does this relate to this? How can you use it? It's not just that it comes out of the pipeline at the end using the common transmission system. It's making effective use of that information that's appropriate and sensible. And last, of course, we're going to continue the work that we have started, where we have the handbooks of supporting tax authorities in the effective use and appropriate use of CBC for tax risk assessment. And that's something that we need to do and we continue to do together also with the business community. So a thank you to the business community for all the input they've provided into this work at this point. So with this, I think I give it over to Pascal.
Thank you, Hakim, and let me drive you quickly so that we have questions for the Q&As to recent developments and give you an overview of what's going on in CTP. You see the banner of the Global Forum here because some recent developments have taken place there. Sorry, the first one being about the start of automatic exchange of information, as I indicated. 49 jurisdictions started on time. Actually, there are a couple of them which are late, and we feel sorry for them. They were late because hit by the hurricane. Warm thoughts to the BVI and a couple of others in the Caribbean, which were badly hit. But they're still working on this, which is quite admirable. Jurisdictions have activated their exchange. The common transmission system has been tested. We even tried to hack it over the summer to make sure that it would be proof. It is. And information exchange took place. We have another 53 further jurisdictions which have committed and will do the exchange of information in September 2018. Finally, and importantly, I would say, we have started internally to reflect on how we will organize the peer reviewing of automatic exchange of information, which is not easy. And this will be a staged process. Today, we can assess whether countries have done their homework to comply with their commitment to exchange information by September 2018. Do they have the agreements in place? They have some more months to match their bilateral agreements through the multilateral framework, but we need to look into this to see whether they will be able to deliver their commitment. We also can check whether the domestic legislation and the domestic regulations are in place to do the automatic exchange of information. But in 2019, we'll be able to start testing these in practice and look into the practice. In 2020, we will start the systemic peer review of automatic exchange of information, and this raises a number of issues. We will know what we see, or countries will know what they receive. They will be able to check whether it's high quality, readable, not readable, they can be exploited or not, but they won't see what they don't see by definition, meaning the information which should have been collected and exchanged and which has not. And this is this type of information that we need to track in the peer review mechanism. And we're working on that and hopeful that we'll be able to come up with good solutions. The Global Forum keeps going on with its reviews on exchange of information on request, and we released recently a batch of new reviews which include the new definition of beneficial owner as defined by the FATF, as now the Global Forum and the FATF have exactly the same definition. And you can see that it's pretty much challenging. Only a few countries are fully compliant, which is the case of Ireland, Mauritius, and Norway in that round. 6 largely compliant, you can read them, Australia, Bermuda, Canada, Cayman Island, and Germany and Qatar. And 1, unfortunately, partially compliant, Jamaica. I'm glad to report, however, that Jamaica has already started enacting new legislation to move up to largely compliant. So we are working with them to make sure that they're doing the right thing. Global Forum, very active on the one hand. There is a Global Forum meeting soon in Cameroon on 15 and 17 of November. We do many other things in CTPA, and in particular tax statistics, which are extremely important. You may have seen released last week or 2 weeks ago, last week, on the 12th of October, it was released in Africa, the updated revenue statistics for African countries. We have doubled the number of participating countries compared to the previous year, and that covers 1/3 of African countries, 1/3 of the population, 1/3 of the GDP. Some may say, well, there are 2/3 missing, but 1/3, I think, in a couple of years is something quite important. This is extremely useful to help countries design good tax policies. Without comparable statistics, you're short of a broad vision of where the tax regimes are. And for instance, the average, unsurprisingly, is pretty low, lower than in LAC, Latin American Caribbean. Of course, lower than in the OECD. The OECD average is 34% plus. The LAC average is above 22%, while in Africa we're just above 19%, with some countries ranking extremely low. You can see Congo, Democratic Republic of Congo, which is at 10%, Uganda 12%, Ghana 15%, where Ghana spent a lot of revenue on tax incentives, with only a few countries being comparable to OECD countries. So very important instrument in the context of domestic resource mobilization. And of course, and that's not a surprise, but we now have detailed numbers which again can be benchmarked against the OECD, Latin American countries, Asian countries. The main source of total tax revenue comes from taxes on goods and services, more than half, particularly VAT, almost 1/3, while direct taxes, or in particular income taxes, are very low. The IMF did last week, I think, a conference on reducing inequalities and using direct tax to get there. Obviously, there is work to do there, which brings me to the domestic resource mobilization work that we are working on, assisting the UN. Sustainable Development Goals are primarily UN goals. And I would like to say hello to our friends in the UN who are meeting currently in Geneva. The Committee on Experts is meeting. I think they've just elected co-chairs, and we wish them good luck. Next steps, very quickly. We mentioned the Global Forum plenary in Cameroon. That's the last line, 15, 17 November. If we go up, a very important meeting, 7, 8 of November, on the Forum on Tax, Crime, Tax and Other Financial Crimes. It will be in London, in the UK. It's the 5th plenary of that group, which gathers people from FIUs, with people coming from tax investigation units, financial prosecutors. And so how can we help them better cooperate and make sure that we have proper interagency cooperation? Georgia mentioned the public consultation on the tax challenges of the digitalization of the economy in San Francisco on the 1st of November. And immediately next, I'm leaving tomorrow for Vietnam to attend the APEC finance ministers who have put BEPS pretty high on their agenda. That will be on Thursday and Friday. So you can see that we're still pretty active and happy to report to you. Now, we have received a few questions. I would like to probably read one for Georgia. Have you been able to do the breakdown of the contributions received so far on the digital economy, Georgia?
So we don't have a precise breakdown because we are still receiving 3-4 submissions every day. but the majority of submissions come from business and business organization. And then probably in the second most popular group of people who have submitted their responses are legal and accounting firms, and then we have civil society and academics.
Thank you, Georgia. Even if it's too late, because the deadline has closed or will close soon, feel free to send your contributions. Feel free to send whatever ideas you may have, wherever you are from. Business, academia, or civil society, they will be more than welcome. I would like to ask a question on your behalf to Sophie, with the first question, which is, what's the number of countries adhering to Article 16 of the MLI? I think the response was in the slide, but Sophie will bring it to you. And we have another question on how the MLI process is proceeding, including, for example, the rollout and usage of the MLI matching database. Sophie.
Yes. Thank you for submitting those questions. On the Article 16, it involved a minimum standard on the mutual agreement procedure. So as a minimum standard, all treaties, all countries, signatories have opted for an update on those measures. Some of them, though, are taken on an administrative level, but that's more for the peer review. But overall, I think that minimum standard has been satisfied by those countries. On the process, perhaps just to mention, in case that was also embedded in the question, I think 26 countries have opted for mandatory arbitration, which result in over 160 treaties to include that. Now, on the second question, and what we do in terms of assisting countries to the implementation of the MLI, and what is the process, and will we continue to work on the matching database? Of course we are. The ad hoc group has extended its mandate until the end of 2018. By then, there's the Conference of the Parties, which will include countries that have bring into force the multilateral instrument. Then they will start to work and replace the ad hoc group. So work will be ongoing on the multilateral, and indeed the Secretariat will be happy to continue to assess countries and to develop even further those tools that you've seen and you used on our website. Thank you.
Thank you, Sophie. We have a couple questions more. One is about the digitalization of the economy and the task force. And the question is there any change there of position from some countries, and what will the task force do? So let me repeat, as I said in introduction, that there is agreement among the OECD, G20, and other inclusive framework members that the task force on the digital economy should focus on the long-term solutions, starting by identifying what are the business models, what are the implications of these business models on the existing framework, and thus ask the fundamental questions. So where is value created? What contributes to value creation? What should be taxed where? This is the fundamental work stream which may drive countries to agree long-term solutions. There is also agreement that short-term solutions are not necessarily good ideas, but there is the recognition that some countries are under tremendous political pressure to move there, as one has seen with the positions taken by a significant number of countries within the European Union or outside the European Union. And the task force will probably, on the 1st of November, given the presence of some countries which are very active there, will have to explore what's going on there. And probably it's better to explore these and come up with a good analysis of what shouldn't be done, which may or not design what could be done, so that if some countries act, they act in a way which would be as consistent as possible to limit the disruption. So I think there is no fundamental change there. We are just now very happy to have all the members fully committed and fully engaged in that work. And I invite you to attend the public consultation, not in person, even though Berkeley is a nice place to go, but we have limited number of seats. But because of that, this will be webcasted, so you will be able to join. Time difference may not be that convenient to most people, but you will be able to watch the public consultation live. Last question, as we've just reached 1 hour and we need to close, but in 1 minute I turn to Arim on the harmful tax practices and IP boxes, patent boxes. France and Italy, what's wrong there, if anything?
In 45 minutes, what's wrong with France and Italy? Well, nothing is wrong with France and Italy, first of all, on the record.
German speaking.
Now, very specifically to the question we've received, it relates to France and Italy, which I tried to explain earlier. So the situation in France and Italy is significantly different. Starting with Italy, Italy in its old regime allowed benefits for marketing intangibles, and that's inconsistent with the nexus. Italy has now changed that. The Italian regime going forward is fully consistent with the OECD, the G20, the international standard. But there is a transition issue that remains, that there is the possibility after a cutoff date to still come in. That's also over now. But there's a cohort of taxpayers that could have gone in at a time that was after the dates that had been agreed. So with respect to Italy, in some sense, there's a transition issue, but the regime going forward is fully consistent with the OECD standard. The situation is different in France. The French regime remains unreformed. It's not a transition issue. It's an issue in principle. It is not consistent with the Nexus standard. I don't have time in the remaining 5 seconds to explain all the differences, but it is not. So it remains the only unreformed patent box regime across the 102 countries that doesn't currently meet the Nexus standard, as a result of which it's been designated as actually harmful.
Thanks a lot, Hakim. Let me thank the whole team. Sophie, welcome again to the team. Georgia, good luck to draft the report on the digital economy. And Caroline, who helps us on many fronts, including on the webcast, and to the whole team behind the screens that you cannot see from here. Carrie, Hazel, and Julien, plus the technical team. Thank you all for listening to us today. We hope this was helpful. We hope to see you in San Francisco. And later we'll probably do another webcast by year-end to report progress on the tax front. Thank you very much, and have a good afternoon, morning, evening, whatever, or night. Thank you. Bye-bye.